On edge. The market seems to be on edge. Traders and investors seem to be on edge. And the real question is, are we on the edge of going on to make new highs? Are we on the edge of maybe going down to make new lows? Hi, I'm Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of May 1st, 2016. And that's really the big question, isn't it? Are we going to go up or are we going to go down from here? I think we can look for some clues in the price pattern that we have. I'm looking at the S&P 500 here and also peering a little deeper into the market. Let's look at a good article here from the Wall Street Journal. I'm not going to go through the article. It's just a great headline. It says, U.S. stocks slip as tech sector slumps. Say that fast several times in a row. Let's look into that just a little bit. So here's Apple, and you can see Apple started heading down, and then as they announced earnings, a huge gap. You know, a recent high of about 112 and currently down here at 93, so well over a 10% drop in a very short period of time. This is Google, and also a very large gap and about a 10% decline in a short period of time as well. And I think you're starting to see the pattern here. Here's Microsoft, down from about $57, currently down here at 48. Again, over a 10% drop in a very short period of time. So you get a pretty clear picture that some really big, important technology companies are dropping pretty radically. And if we look back at the S&P 500, we see that last week, it was really the first week since the middle of February where we had any kind of a decline in a week. And I've been saying, boy, this is an unusual bear market rally. I still think we're in a bear market. But this was an unusual bear market rally in that it wouldn't go on forever and that it would probably turn around at some point. And that may be beginning. We were looking at this key level here of 2116 on the S&P 500 as a previous high. If we took that out, then maybe we would be going on to some new highs. Now that still could happen, but I think there's a much better chance, much higher probability of it heading down. And let's look at one more thing first before we analyze this chart in more detail. This is the CNN Fear and Greed Index, and it's currently showing that we're in greed. Now, a while ago we have been at extreme greed. But if you look at the trend here, this is interesting. Now, I don't trade based on this, but it can give me an expectation of what to watch for. So you can see we peaked in terms of greed, and greed seems to peak as the market's going up. And if you look back early or late last year, right before the market declined, we had peaked in terms of extreme greed, and then the market, of course, dropped early this year. Same thing happened last year. We peaked on extreme greed, and then last summer we had a really dramatic decline, and we appear to have peaked at extreme greed, and we're rolling off just a little bit. Now this lags the market. There's extreme greed as the market's going up, and there's extreme fear as the market is bottoming out. But it's interesting to see that this may be peaking as the market goes. We could probably see this roll over. So as always, we will base our trading and investing on what's actually happening in the markets. And I think we got a really interesting pattern here. I want to review the bigger picture, the bigger pattern that we're in. And again, I say we're in a bear market. And this was the top was last May, and since then, Dow theory says the trends move in lower lows, lower highs, lower lows, lower highs. Now this lower high went pretty high, but it did not take out this level here. And inside of that, these are big moves, right? This is like a year's worth of data here. But inside of that, there are some smaller clues, and let's just switch colors here. So last summer, when this big decline began, we got that same clue that lower lows, lower highs, lower lows, lower highs. Boom, right? And we had called that out. We've got a couple of YouTube videos where we said, hey, if it took out that previous low, that this was going down, and it sure did. And then last year as well, on a smaller scale, lower lows, lower highs, lower lows, lower highs. Boom, right? Now, could that be happening here? Well, we got to see. If we do this, we pull up a little bit and put in a new low, then down she goes. There's a super high probability of it. This isn't confirmed yet. And it certainly could do this and then go on to make new highs, but that's a really low probability. And if it does, the highs are not going to be meaningful. They're not going to be very exciting. This is the high probability scenario. So even if we get a little pull up soon and then start heading down, we take out this low, whatever low's put in, That's pretty clear evidence of the bear market continuing and probably taking out this low here and putting in new ones. So what's going to drive the market over the short term, over like the next week? Well, it's not going to be economic reports. Here's the calendar for next week, and it's very, very light. Only a few meaningful reports coming out next week. The ISM Manufacturing Index on Monday, International Trade on Wednesday, oil inventory report on Wednesday, jobless claims Thursday, and employment situation Friday. That's a pretty light week compared to last week. So what's really probably going to drive the news is corporate earnings. We're in the middle of the earnings season. We got big companies coming out next week: Cisco, Pfizer, Priceline, Anheuser-Busch, Humana. A lot more companies reporting. So I think earnings are what's going to drive it. And so far, earnings have not been that great. And you saw those bigger tech companies. Their earnings weren't great, their outlook wasn't great, and they dropped pretty significantly. So if the market does prove that it's heading down, that's pretty exciting. There's a lot of money to be made. The market, when it drops usually more dramatically than it does go up. And so we've got lots of trades ready to go. If it does head up, that's going to be tough. There's not a lot of money to be made in that. There'll be a few good plays, but it will be a lot easier to trade and there'll be more money to made if we really start another leg down. So we're watching for that and just waiting for it to prove itself. It'll take a little bit of time. So let's look at gold and oil as we always do each week. So last week I said we were in kind of a decision point here for gold. That clearly a recovery in gold was underway. It proved that when it crossed over 1113, it took off. And the real question was, were we going to get a correction before it continued up, or was it just pausing a little bit into a continuation of this same trend here? And it went and put in new highs, pretty dramatic new highs last week. So for now, the short-term forecast is it'll continue to do that. It may pull back a little bit, but it'd have to come down to here before we said maybe the pattern's changing. For now, it may pull back, but it looks like it's just going to keep putting in new highs for a while. And that's good. And again, gold, the long term, the bigger picture target that gold is going to through
bullish pyramid alert. Trading point entry now.
This year, maybe into next year, is up into this zone here, 1347 to 1532. And I'll go ahead and stay on a weekly time frame for oil. So oil is really proving that its recovery has begun, massive downtrend. This is a corrective wave to that downtrend. And the target zone for this to get to is $63 to $84 a barrel on the futures contract. And it's showing every sign that it's heading there. It won't go straight up. Again, this could play out through this year into next year. It won't go straight up. It will do higher highs, higher lows, higher highs, higher lows. Oil's volatile. It'll probably swing quite a bit, but super clear that the recovery here is underway on oil, and it is continuing to head up. And there's lots of good trades. We've been in good trades on that. We're making some good money on oil-related trades in our stock picking service. Well, that's it for this week. I think earnings are going to be the big deal, and we'll watch and see if the next leg down on the broad market is confirmed, and that'll probably be dramatic when it really starts getting underway, and we'll be ready for that, and we will trade and profit from the realities of the market. Take care. We'll catch you on the next time. Thanks.